Digital currencies have rapidly transformed the way we think about money and transactions. From Bitcoin to central bank digital currencies, these innovations promise faster, more efficient payments and global accessibility. However, with these advancements come a host of challenges that must be addressed for digital currencies to reach their full potential. In this video, we'll explore the most pressing issues facing digital currencies today, from security concerns to regulatory uncertainty. Let's begin by understanding what digital currency really is and why it's become such a hot topic in the financial world. Digital currency refers to any form of money or payment that exists purely in electronic form. Unlike traditional cash or coins, digital currencies are stored, transferred, and managed entirely online. This includes cryptocurrencies like Bitcoin and Ethereum, as well as digital versions of national currencies issued by central banks. The appeal lies in their convenience, speed, and the potential to lower transaction costs. But as we'll see, these benefits come with significant hurdles that must be overcome for widespread adoption. One of the most significant challenges facing digital currencies is security. Digital assets are often targeted by hackers, leading to high-profile thefts and losses. Unlike traditional banks, which offer some level of protection and insurance, digital currency holders may have little recourse if their funds are stolen. This vulnerability undermines trust and makes many people hesitant to adopt digital currencies for everyday use. As we move forward, improving security measures will be crucial for the future of digital money. Another major challenge is the lack of clear regulations surrounding digital currencies. Governments around the world are still figuring out how to classify and oversee these new forms of money. This uncertainty creates confusion for businesses and individuals alike, making it difficult to know what's legal and what's not. Without clear rules, digital currencies can be used for illicit activities, further complicating their adoption. Establishing consistent regulations will be key to building confidence in digital assets. Digital currencies are notorious for their price volatility. Unlike traditional currencies, which are generally stable, cryptocurrencies can experience dramatic swings in value within hours. This makes them risky for both investors and everyday users. People may be reluctant to use digital currencies for payments if they can't predict their value from one day to the next. Addressing volatility is essential for digital currencies to become a reliable medium of exchange. As digital currencies gain popularity, scalability becomes a pressing issue. Many blockchain networks struggle to handle large numbers of transactions quickly and efficiently. This can lead to slow processing times and higher fees, especially during periods of high demand. If digital currencies are to compete with traditional payment systems, they must find ways to scale up without sacrificing speed or security. Many digital currencies, especially those using proof-of-work mechanisms like Bitcoin, require enormous amounts of energy to operate. This has raised environmental concerns, as the energy used by some networks rivals that of entire countries. The search for more sustainable solutions such as proof-of-stake or other consensus mechanisms is ongoing. Reducing energy consumption is vital for the long-term viability of digital currencies. For many people, using digital currencies can be confusing and intimidating. Wallets, private keys, and complex interfaces create barriers to entry for non-technical users. Improving the user experience is essential to encourage broader adoption. Simplifying wallets, making transactions more intuitive, and providing better customer support will help digital currencies reach a wider audience. Digital currencies often promise greater privacy than traditional financial systems. However, many blockchains are fully transparent, allowing anyone to view transaction histories. Striking the right balance between privacy and transparency is a challenge. Too much privacy can enable illegal activities, while too little can compromise user security. Finding solutions that protect users while satisfying regulatory requirements is a key issue for the industry. Despite growing interest, digital currencies still face significant adoption hurdles. Many merchants do not accept them, and consumers may be wary of using unfamiliar technology. Education, incentives, and partnerships with established financial institutions can help bridge the gap and encourage more widespread use of digital currencies in everyday life. One of the promises of digital currencies is the ability to make cross-border payments quickly and cheaply. However, differences in regulations, exchange rates, and technical standards can complicate international transactions. Overcoming these barriers will be essential for digital currencies to fulfill their potential as a truly global means of exchange. While many digital currencies are designed to be decentralized, some aspects of their operation can become concentrated in the hands of a few players. For example, mining pools or major exchanges can wield significant influence over the network. This centralization can undermine the original vision of digital currencies and create new risks for users. So many different digital currencies and blockchain networks, interoperability is a growing concern. Users may find it difficult to transfer assets between platforms or use different currencies seamlessly. Developing standards and protocols that allow for smooth interaction between networks will be crucial for the future of digital finance. Digital currency space has been plagued by fraud and scams, from fake initial coin offerings to phishing attacks. These incidents erode trust and can result in significant financial losses for unsuspecting users. Educating the public and implementing stronger security measures are essential steps in combating fraud in the digital currency world. Ensuring legal compliance is a complex challenge for digital currency projects. Laws vary widely between countries, and staying compliant with anti-money laundering and know your customer regulations can be difficult. Projects must navigate a patchwork of rules to operate legally, which can slow innovation and increase costs. Safely storing digital currencies is another major challenge. Unlike traditional assets, digital currencies require secure digital wallets and careful management of private keys. Losing access to a wallet can mean losing funds forever. Developing reliable custody solutions is critical for both individual users and institutional investors. Digital currency networks must constantly evolve to address new challenges and improve performance. Upgrading a decentralized network can be complicated, requiring consensus among participants. Disagreements can lead to forks, creating competing versions of a currency and confusing users. Effective governance and upgrade mechanisms are essential for long-term success. For digital currencies to achieve mainstream adoption, they must integrate smoothly with existing financial systems. This includes compatibility with banks, payment processors, and other financial institutions. Bridging the gap between digital and traditional finance will require collaboration, innovation, and regulatory clarity. Taxation of digital currencies is a complex and evolving issue. Users must keep detailed records of transactions for tax purposes, and rules can vary widely by jurisdiction. Uncertainty around tax treatment can discourage participation and create headaches for both individuals and businesses. Digital currency markets are often less regulated than traditional financial markets, making them vulnerable to manipulation. Pump and dump schemes, wash trading, and other tactics can distort prices and harm investors. Stronger oversight and transparency are needed to protect market integrity. Unlike traditional banks, digital currency platforms may offer little or no consumer protection. If a platform fails or is hacked, users can lose their funds with no recourse. Building robust consumer protection mechanisms is essential for building trust and encouraging broader adoption. Not everyone has equal access to the technology required to use digital currencies. People in regions with limited internet connectivity or access to smartphones may be left behind. Ensuring digital currencies are accessible to all is a key challenge for achieving financial inclusion. Smart contracts are self-executing agreements built into some digital currencies. While powerful, they can contain bugs or vulnerabilities that are exploited by attackers. Ensuring smart contracts are secure and reliable is critical for the safe use of digital assets. A lack of education and awareness about digital currencies can lead to mistakes, losses, and missed opportunities. Providing clear, accessible information and resources is essential for helping people understand how digital currencies work and how to use them safely. Verifying user identities is a challenge for digital currency platforms. Balancing privacy with the need to prevent fraud and comply with regulations requires innovative solutions. Biometric authentication, digital IDs, and other technologies are being explored to address this issue. Stablecoins are digital currencies pegged to traditional assets like the US dollar. While they aim to reduce volatility, they face their own challenges, such as maintaining reserves and regulatory scrutiny. Ensuring transparency and stability is crucial for the success of stablecoins. Central banks are exploring their own digital currencies, known as CBDCs. While these could offer stability and government backing, they also raise questions about privacy, surveillance, and the role of traditional banks. The design and implementation of CBDCs will shape the future of digital money. Digital currencies enable the tokenization of real-world assets, from real estate to art. While this opens up new investment opportunities, it also introduces legal and technical challenges. Ensuring proper ownership, transferability, and compliance is essential for tokenized assets to thrive. Digital currency networks can be vulnerable to various types of attacks, such as 51% attacks or denial-of-service attacks. These threats can disrupt operations and undermine confidence in the system. Ongoing research and development are needed to strengthen network security. Decentralized digital currencies often rely on community governance to make decisions. Achieving consensus among diverse stakeholders can be difficult, leading to disagreements and even network splits. Effective governance structures are needed to ensure the long-term health of digital currency projects. Liquidity is essential for any currency to function effectively. Some digital currencies suffer from low trading volumes, making it hard to buy or sell assets without affecting prices. Improving liquidity through better exchanges and market making is vital for healthy digital currency markets. Digital currency protocols must be flexible enough to adapt to new challenges and technologies. However, making changes to decentralized systems can be slow and contentious. Balancing stability with the need for innovation is a key challenge for developers and communities. Traditional financial institutions may view digital currencies as competition and attempt to limit their growth through lobbying or restrictive policies. Navigating the relationship between old and new financial systems is an ongoing challenge for the digital currency industry. Public perception of digital currencies can be influenced by media coverage, high-profile hacks, and regulatory crackdowns. Building a positive image and educating the public about the benefits and risks of digital currencies is crucial for long-term success. The fast pace of innovation in the digital currency space creates pressure to constantly develop new features and products. While innovation drives growth, it can also lead to rushed releases and security vulnerabilities. Balancing innovation with careful development is essential. Digital currencies operate across borders, making global coordination on regulations and standards essential. Differences in national policies can create confusion and limit the effectiveness of digital currencies. International cooperation will be key to unlocking their full potential. Beyond energy consumption, digital currencies can have broader environmental impacts, such as electronic waste from mining equipment. Addressing these issues is important for ensuring that digital currencies are sustainable and responsible choices for the future. Digital currencies must prove their resilience in times of crisis, such as economic downturns or cyberattacks. Building robust systems that can withstand shocks is essential for gaining the trust of users and investors alike. Digital identity solutions are closely linked to digital currencies, enabling secure and verifiable transactions. However, creating digital identities that are both secure and privacy-preserving remains a challenge. Ongoing innovation in this area will shape the future of digital finance. Different generations have varying levels of comfort with digital technology. Older adults may be less likely to adopt digital currencies, while younger generations may embrace them more readily. Bridging this generational gap is important for widespread adoption. Digital currencies have the potential to revolutionize remittances, making it cheaper and faster to send money across borders. However, regulatory and technical challenges must be addressed to realize these benefits for migrant workers and their families. The digital divide refers to the gap between those who have access to digital technology and those who do not. This divide can limit the reach of digital currencies, especially in developing regions. Addressing infrastructure and education gaps is crucial for inclusive growth. Digital currencies are reshaping the future of payments, offering new possibilities for speed, convenience, and global reach. However, realizing this future will require overcoming the many challenges we've discussed. The journey ahead is complex, but the potential rewards are significant. Throughout this video, we've explored the diverse and complex challenges facing digital currencies. From security and regulation to user experience and environmental impact, each issue must be addressed for digital currencies to succeed. As technology evolves, so too will the solutions to these challenges. The world of digital currency is still in its early stages, with many hurdles yet to be overcome. But with ongoing innovation, collaboration, and thoughtful regulation, digital currencies could transform the global financial landscape. The challenges are real, but so are the opportunities for a more inclusive and efficient financial future.